everybody, and welcome to Hawkeye FX with your host Marcus Toombs on the 24th of August 2017. Now in this video I just wanted to take a detailed look at the euro-pound pairs, as it's quite interesting what's happening in this currency. If we start off on the monthly chart here, going way back to 2000, you can see here the euro strengthened against the pound to its height, its highest point ever back in 2009 here at 0.98, so just shy of parity at $1 equals £1. Since then we've had this fall down in the price here, and then more recently in 2016 and 2017 the euro has been gaining strength against the pound. You can see this vertical line here is Brexit, which we had this big jump up in the price. Then more recently we've had the French elections here and the strength coming into the euro. Now you'll note specifically that the current price this week has taken out the previous high here, which was the flash crash in October last year following Brexit. Now to put this in context, you can see here with some way to go still to break the all-time high of 2009 and even to reach parity at 1.000. Okay, looking at this chart, I need to put on my parameters for the trade to see where this euro may well turn. If you see here the low, the high and the pullback here, then we came up, we had all these closes on the 161 level here, and then interestingly the Brexit, this really big bar of Brexit here came and peaked out right on the 261 level there. We then had this further jump up in price to this level, and you'll notice the flash crash where this stopped on the high from just before 2010 here, and you can see previously on these four monthly bars we had a close on each of these and a high point on those four bars there, so a significant level. You can see currently we've come up, we've broken the previous high, and our next target here must be the 423 level, and I believe this will probably be hit sometime in the next week. Now just to see if this level has relevance, we put a horizontal line here on this previous high here. You'll see this lines up exactly with the 423 level. Should we break this level here, then there are some more significant levels here on the previous high 2009. I think that might also be 2009, and then also this previous high until we come to the all-time high here. So do keep these marked on your charts as significant levels. Now jumping down to the daily time frame here, you can see this is the trade parameter that we work from on this level with our low, our high, our pullback here to the 50. We touched the 38.2 and accelerated away from the 50, and this has been the tremendous run through the French elections and the strength in the euro. And currently you see here we've just now come up and touched the 423 level here, and we'd expect a reaction off that, which we've got. Now you will notice that the monthly 423 level here is in this blue box here, so we shall see if this comes on and hits this further level. Now looking here on the daily fat man, I just want to also give some understanding how we can get such a long run on the daily time frame here on a particular currency pair and what that looks like in the fat man. You can see here I've only shown the pound in orange and the euro in the green lines. Now if we look at the price action, it just goes up straight up in the euro pound chart, but we have up and down on the fat man here in the price. And by way of explanation, when lines are traveling parallel to each other, as you can see here, the pound going up but the euro right next to it, the pound coming down, the euro right next to it, going up together and then down together, what we tend to find that is whatever is happening in the charts, that continues to happen whilst these lines are still acting parallel. Once they split off, then we'll get a change in the direction of this price. So by way of further explanation, you can see here the euro is weakening in the charts and the pound is also weakening in the charts. Because they're both weakening, of these two the euro is still the stronger, and so we can still go up in the charts. Now what does this mean for the UK economy? If we look here, we can see that 53% of imports came to the UK from the EU, and so buying our goods from the EU will now become a lot more expensive, and this will continue to push inflation up, which in the long run will mean we have to increase our interest rate to offset the inflation if it surpasses in the long term the Bank of England's 2% target. It also means for the UK that our holidays to Europe are very much more expensive, but instead our goods exported to the rest of the world are a lot cheaper, and holidays here in the UK are a lot cheaper for people visiting. This actually has a very good impact on our economy and will stimulate growth. In the long term, I think these prices are starting to get uncomfortably high and we will be due a correction. Now, in the short term, we could well see this price push on just another 100 pips and come up and test the monthly 423 level here at 0.9292 level. Now, as usual, I hope this insight gives you a little bit more understanding on this currency pair, and I wish you all the best for your trading in the coming week.